Welcome back. Now, at the full-year mark, Cashbuild has managed to assemble top line growth of 5%, while the bottom line came in double of that at 10% in a strained DIY market where inflationary cost increases weighed. Now, this thanks to its store expansion strategy bearing fruit. A final dividend of 3 Rand was declared, bringing the total payout to just over 6 Rand, reflecting an increase of 12%. Company CEO Werner de Jager joins us right now with his assessment of the building blocks underpinning this performance. Werner, thanks so much for your time this afternoon. As mentioned, delivering both top and bottom line growth, and this despite the tough trading environment. Just contextualize the year that was for us and some of the pressure points that you had to contend with.
Thank you. Yeah, it's just consumers are under extreme pressure, and it's very difficult for us to get more feet into our store, and hence we've this year embarked on a strategy to offer real good value for customers and entice them back into our stores, and I think that's paid off handsomely for us. We are trading against the 53rd week of the prior year, so all in all, very happy with the results.
And just on the consumer, right? The last time we spoke, you mentioned that we aren't seeing the expected spend that would have come through from two-pot withdrawals, and with buildings materials not being a necessity, the positive impact of low inflation and interest rates have also not filtered through to the sector. Looking at the first and second half, have there been any shifts in terms of spending?
Not really. What we did see in the second half is a bit more feet into our store, but we saw that our average basket was a bit smaller. So it is an indication that people are coming, but they're not spending as much as they used to be able to spend, which is an indication of some constrained consumers.
Now let's look at how you've been able to contain costs, Werner, and also pricing power, right? I see that the selling price inflation was at 1.7%. Walk me through how that also filters down through to margins and filters through to the group also protecting its margins.
So that inflation is for the Cashbuild basket. So the biggest single item in that basket is cement. We sell roughly 25% of our business is cement. And on that category, we saw inflation of only 0.3% this year. So that went a long way of helping the inflation to stay low. The second biggest category, which is decorative, also paint and decorative, also saw some low inflation, as well as steel products, which actually saw some deflation in the year of about 2.5%. So that all goes well for the consumer, that it's a bit more affordable. So we managed to keep that percentage increase low. From the cost side, on the other side, we did see our gross margin eke up slightly from 24.7 to 24.8, but on a 0.1% on a 11 billion turnover does add a bit to the bottom line, and the fact that we managed to contain operating expenses resulted in us being able to show the 10% headline growth.
And just on those gross profit margins, talk to me about the competitive landscape then, because that also works into that. What are you seeing when it comes to competition and trying to gain more market share, even in this constrained consumer spending environment?
So we've seen some crazy specials and crazy deals out there. We're trading against independent traders that doesn't always necessarily sell the same quality product with us. And we've just said to ourselves that there's one product that we know we're the best in the country and that will always be the cheapest, and that's on cement, which is a big part of our revenue. And we made sure that every single store every day checks cement pricing and make sure that we're the best price in the market. And but also by doing that is not just do crazy things, but make sure that we protect our gross margin. We won't be irresponsible and be selling stuff to do loss leaders and things like that. It's never been our business, and we're not seeing that happening in the future.
And just on spending trends, you mentioned the importance of sales of cement in the business. Talk to me about that in particular, and if we are seeing an increase in items like cement, like bricks in the business, and does that allude to, I guess, maybe bigger projects or consumers embarking on bigger projects, contractors embarking on bigger projects in this economy?
Yeah, we did. That's probably one of the things we saw in the second half, is that our structural materials started doing much better. Cement and bricks and roofing and those type of categories.
Yeah.
So that is an indication that people are starting some projects which will lead to decorative products following. It should be good news for the bakkie builders, which makes up a big portion of our revenue, that they also have a bit more business to do.
The group is also exposed to other African markets, particularly Southern Africa. How have you been performing on that front, and I guess also managing risks when it comes to foreign exchange?
Yeah, so we the one country, Malawi, is the bigger issue of when it comes to foreign exchange. Luckily, it's only 2 stores in that market, so it's small in the bigger schemes. Botswana, the exchange rate is fairly stable, and then for the rest, it's really it's 1-to-1 to the rand. So forex is not really an issue. But we've seen some mixed fortunes. Namibia, as a country, performed well for us. Lesotho performed well. Eswatini was a bit under pressure, and we believe it's the early signs of some of the tariffs and some of the US funding that's been stopped in that country. So there are these type of risks that we're facing. But all in all, we've been long trading in those countries, and they've had good years for us.
And quickly, before I let you go, walk me through the store expansion plan. There are plans to open even further stores going into FY26.
That's correct. Yeah, we opened 8 new stores this year, but it was overshadowed by the 12 we closed. Yeah. We closed 11 P&L stores as we signaled to the market where they were non-performing. But we've already planned again for this financial year ahead that there should be at least another 8 stores. 2 of them already opened since the year end. So we're on track, and we're still going to focus on that expansion drive of ours.
All right, Werner, thanks so much for your time and taking us through the year that was for Cashbuild. That was Werner de Jager, CEO of Cashbuild.